the puppeteer. We've all seen it happen. You're watching a stock or a crypto chart, it's climbing beautifully, and then, boom! A sudden, violent drop that makes no sense. Or maybe it's the opposite. A dead coin suddenly shoots up 400% for absolutely no reason. In every market, from Wall Street to your local flea market, there are people pulling the strings. First up, the classic puppet master, the spoofer. This guy doesn't actually want to buy or sell. He just wants you to think he does. Picture a trading floor, frantic and loud. Our spoofer leans over a terminal, placing a massive, visible order to buy 1 million shares. This flashes up on screens, and everyone thinks, wow, big money is buying. I better get in. So the price starts to spike. The second it does, the spoofer cancels his order. He just created a fake wave of hype, wrote it up, and sold his actual holdings for a quick profit. He's not trading, he's acting. And the stage is his order book. The info whisperer. Now, let's step away from the charts and into a smoky back room. Or, in the modern age, a private Discord server. This is the realm of the info whisperer. The manipulation here isn't about fake orders, it's about fake news. This character plants a rumor, like a seed in the minds of investors. I heard Apple is buying this tiny AI startup. My buddy at the SEC says a merger is coming. The whisperer doesn't make a massive trade that alerts the algorithms. He just tells a few key people, who tell a few more. The information cascade begins. Suddenly, the stock is trending on Twitter. News outlets start investigating. The price moons, and our quiet whisperer, who bought in at the very bottom, calmly sells into the frenzy. They don't need to push the price, they just need to push the narrative. They create a digital campfire, and the market runs toward the smoke. The pump and dumper. You've definitely heard of this guy. He's the loudest person in the room, the one with the megaphone. This is the pump and dumper. Forget subtlety. This character is all about raw, aggressive volume. He'll typically target low-liquidity penny stocks or obscure crypto coins, things that are easy to push around. Picture a group chat with thousands of people, all hyped up on emojis and rocket ships. The leader sends the signal, "Buy now!" Everyone rushes in at once. The price skyrockets vertically in minutes. It's a beautiful, terrifying green candle. But this isn't a movement, it's a trap. While everyone is cheering, the leader is hitting the sell button as fast as he can. He dumps his bags on the people who just bought. By the time the crowd realizes the rocket has no fuel, the price has crashed back to earth, and the dumper has vanished into a pile of cash. The wash trader. This type is a bit more mysterious. He doesn't shout, and he doesn't whisper. He works in the shadows, trading with himself. Meet the wash trader. To an outsider, it looks like a market is booming. Lots of volume, lots of trades happening. But look closer. It's just the same guy buying from himself over and over. He sells to his left hand and buys with his right hand. Why? To create the illusion of demand. Imagine a new NFT collection, completely dead, until suddenly there are 50 sales in an hour. It catches your eye, right? You think, wow, this is hot. That's the wash trader at work. He's creating a fake history, a fake buzz. He's tricking the analytics bots and the FOMO investors into thinking they're missing the boat. It's a magician's trick. Look at the impressive quantity of trades. Don't look at the fact that they're all between identical wallets. The ladder attacker. This one is a brutal tactic, often used for short squeezes. This is the ladder attacker. He operates on speed. The goal isn't to just buy a lot of stock, it's to trigger a chain reaction. He starts buying just above the current best price, then the next best price, then the next. He is literally climbing the ladder of sell orders, buying them out one by one. This forces the price up aggressively. The visual for this is a fast-forwarded screen with green flashes. Why does he do this? Because rapidly rising prices scare short sellers. They panic. They have to cover their positions by buying back the stock, which pushes the price up even higher. It's an avalanche he starts with a single snowball. He creates a self-fulfilling prophecy. He doesn't just bet on the price rising. He actively makes it rise so violently that the market is forced to follow. The P&A, poop and scoop. Finally, we have the dirtiest player of them all, the poop and scoop. This is the reverse of the pump and dump. Instead of creating hype, he creates panic. This character uses fear as his primary weapon. Imagine a major company. Then, out of nowhere, a devastating rumor hits the press. CEO is under investigation. Massive accounting fraud. It could be a fake news article, an anonymous blog post, or a strategically leaked document. The stock price plummets as terrified investors run for the exits. While everyone is selling in a panic, the poop and scooper is buying everything they can get his hands on at the bottom. The price is crashing? Great, that's a clearance sale. Once he's accumulated his position, the news is revealed to be false or exaggerated, and the stock bounces back. He bought the fear and sold the relief. So whether it's fake orders, fake news, or fake volume, the market is a battlefield full of these archetypes. The goal isn't to become cynical, but to become aware. Don't be the pawn, be the player who recognizes the game. If you enjoyed this breakdown, make sure to hit that like button and subscribe. Thanks for watching.